Welcome to Tim's Strategy of the Week series. Today we're looking at a great strategy, the core trading strategy. Be with you on that shortly. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of the Strategy of the Week. Today we're looking at a trading strategy that will work equally well for all markets. It can be used in conjunction with your current entry strategies. It's called the core trading strategy. The core trading strategy involves taking a primary long-term position or a core trade and then actively buying and selling shares depending on the price action. In other words, a core trend blends together the power of the long-term buy and hold strategy with active trading. If you can master the core position trading system, you can maximize your profits while at the same time minimizing your losses. The most common way to trade around a core position involves a three-step process. Step 1, buy a stock at the initial price. That'll be your core trade. Step 2, as the stock price increases, scale out of your core position and cash in profits as short-term targets are reached. As your position size is steadily reduced, the exposure to potential unfavorable price movements is minimized. And step number 3, wait for a correction or pullback in the stock price to buy back your shares and rebuild your core position. So the core trading strategy cashes in profits as the stock price rises while allowing you, the trader, to keep a core trade and not miss further stock price appreciation. The core position is rebuilt by taking advantage of a correction or a price pullback, which would not have been possible with the simple buy and hold strategy. Let's take a look at an example and see how trading around a core position really works in practice. Establishing a core trade is one of the basic trading disciplines you'll need under your belt. Here's an example. Say you have an initial core position of 500 shares of XYZ stock bought at $100 per share. If the stock moves up 10% at $110, you sell half your position, or 250 shares, then wait for a correction before you buy the same shares back. With this approach, you'll accomplish three things. You'll lock in profits, you'll minimize your downside risk, and at the same time, you'll have some skin in the game by holding some shares in case the price continues to appreciate. If after you bought your favorite stock, the share price drops more without impacting the long-term outlook of the company or breaking any technical barriers, you can buy some more shares. For example, if XYZ share price drops to $90, you might buy an additional 100 shares or as much as your risk tolerance dictates. The downside is that the core trading strategy doesn't work that well when you own low volatility stocks or when the stock you bought is a high quality stock that trends steadily upwards. Let's take a look at why trading around a core position can help you adjust your profits. Trading around a core position allows you to keep exposure to your favorite stock while at the same time avoids losses when a correction happens. In other words, it keeps you from missing out. When you have unfavorable trading conditions, working around a core trade can help you reduce the risk while staying connected to the long-term stock view. And here's why core position trading works. The natural ebb and flow of price movement gives the smart money traders, or the big institutional guys, the chance to take profits, which causes pullbacks. In return, retracements give the chance for new investors to buy cheap stock. When enough stock buying takes place, the stock price will rise again. And then the cycle just starts all over. I call this phenomenon the market breathing. It breathes in and out continuously. The core strategy takes advantage of these constant buying and selling pressures. For example, growth stocks that have long-term potential are good candidates to establish a core trade. Let's take a look at our method to trade around a core position. Most of our systems at Trading Strategy Guides focus on how to pick stocks and trade them methodically. Now we want to teach you how to trade around a core position. These core trading methods are very useful in crazy and volatile market. Step 1, pick a stock. The first thing you need to do is choose a stock that you have a strong bias on. Find the stock that you think has the biggest potential to appreciate in the long run. I highly recommend you take a look at Trading Strategy Guide's Dream Trades app to help you pick stocks to trade. Dream Trades will help you find stocks that are moving and have sufficient volume to ensure continued volatility. You'll find a link to the Dream Trades app in the description box below. For the purpose of this example, I'm going to take a look at Tesla because, as you know, I like Tesla, and it's a great stock for long-term investing. Tesla is a very volatile stock and is a great play for the core trading strategy. The next thing we need to do is establish a core trade. When it comes to buying stocks, instead of investing all your chips at once, you should buy in increment. The idea behind this method is to bring the dollar cost averaging of your position down. So why is that important? Well, if you're not that good at timing the market, this smart investing strategy will help you purchase the stock at a cheaper price on the average. Secondly, if you have FOMO issues, the fear of missing out, you can make sure that you have some skin in the game by getting in early and purchasing increments. Let's assume you want to buy 1,000 shares of Tesla. The way to set it up is to buy 200 shares over a period of 5 days until you have bought your full stack. This will be your core position as a stock investor. If you're a disciplined investor, this approach can yield handsome profits. The average cost for purchasing the 1,000 Tesla shares in this example is $480 per share. Next, let's talk about how to scale out of a position and lock in profits. Once you have a core trade established, you want to start locking in profits at various price targets. In this case, you can look to sell 200 shares every time the stock price jumps 10 or 20%. Once Tesla's price reaches $580, you sell 200 shares and continue to scale the same way on the way up. Understand that you don't want to get rid of all your chips. You'll want to hold on to some shares, anywhere between 20 and 40% of our core trade, to have some skin in the game for the long term. So you continue to scale off and cash in some profits again when Tesla stock reaches $680 and then some more at $780. You hold on to 400 shares in case the stock price continues to rise. Next, wait until a correction or some sort of pullback indicator happens so that you can repurchase your full chips. Now we want to reestablish our full position and buy back the same amount of shares we sold at the previous step. Once the stock is knocked down, we want to make sure the reason behind the sell-off is not because the company has any real prospect issues that can affect the long-term gains. At the early stage of a recession, even a stock market crash looks like a simple correction. So as the stock price comes down, you start buying in the same amount of 200 share increments. As the stock price continues to slide, you continue buying until your full 1,000 share position is established. Then you'll repeat step number 3 as the price turns back up. Over time, the stock profits will add up, and that's what trading around a core position is all about. Obviously, you can scale in and out of your position at a size that's more suited to your risk tolerance. The basic idea is to put you in a spot where you don't have too many shares in case the stock gets hammered, or have too little on the table to take advantage of a bullish market. Now, here's a question for you. When should you trade around a core position? Whether trading around a core position is good or not depends on your goals, availability, and risk tolerance. Having said that, even if you're a long-term investor, it's a good idea to periodically take some profits off the table. This will benefit you psychologically. Secondly, from the standpoint of risk control, you'll better be able to manage the risk. As you know, there are no certainties in this business, as the market can always turn against you and your unrealized profits can vanish. So you should trade around the core trade if you're psychologically prepared to play this back and forth game of getting in and out of the market. Secondly, you should find high volatility stocks that have strong underlying fundamentals. This will ensure you get plenty of corrections while the overall bullish bias remains intact. In summary, the essence of core position trading is buying trades of your chosen stock at lower prices and scaling out when the stock market rises. The core trading strategy will help you optimize your profits by taking advantage of short-term price movements in the stock market and holding on to a long-term position. Core position trading is an important core strategy that can be implemented across all asset classes, including Forex, commodities, futures, options, or cryptocurrencies. Now that you know the basics of core position trading, you can start generating a lot of small gains that will add up in the long run. And that's it for this week's strategy. Here's just a small update on my trade spreadsheet. Tesla hit our stop for a big win this week, increasing our account by almost $6,400. As of Thursday morning, I'm flat, but the Canadian dollar, Japanese yen, and the Great British Pound Australian dollar setups might trigger, respectively, a buy and a sell today. I'll get into all these details in Monday's video. And that's a wrap for today's video. Be sure to come back next Wednesday at 3 p.m. as we discuss different trade setups in our trading education series. And don't miss my trading picks of the week on Mondays and my strategy of the week on Friday right here at Trading Strategy Guide's YouTube channel at 3 p.m. New York time. Be sure to subscribe and hit the bell so you'll be notified when these videos come out. Have a great weekend, and I'll see you with a trade pick on Monday.